Alright everyone, Cowboy Trades here and welcome back to the channel for another super quick update on GalaGames. So, decision time is here. GalaGames is sitting on its last line in the sand. Let's discuss this. Now, on the channel, we've been talking about this level quite a lot, the 618 Fibonacci. In the past few days, over on the daily time frame, Gala has bounced from this level and started to head up. However, we hit our head on the 382 Fibonacci and almost made it up to this macro 618 Fibonacci. However, looking at this, you can really see candle body closes right underneath this macro 0.5 Fibonacci from the swing high down to the swing low. It looks like we've got a pretty strong rejection from this level. If we do come back over to the weekly time frame, from the most recent local low on the 26th of December, looking at the swing low up to the swing high, as you can see, we beautifully came down to the 618 Fibonacci. We had a strong bounce, and since then, we've literally wiped out almost all the gains from the bounce. You can see this huge wick to the upside. When this bounce did happen, you can see the daily oscillators. It only took a few days to absolutely make them all super overextended. We'll talk about these more in just one second, but what I really want to warn you about is GalaGames looks like it is putting in a rounding top. We are heading down at this moment in time. We are sitting right on the 618 Fibonacci at 3.38 cent, and that is your last line in the sand. If we do break to the downside, you might be thinking, hey Cowboy, do we not have support at this 786 Fibonacci? Technically we do, but look at the pattern that we've got on the daily time frame right now. We've got a huge run up, we've got a spiky top, spike. If we come down to the 786, this is basically going to be confirming a Bart pattern with a price target all the way down at 1.5 cent, which will likely take us down into new lows that we have been discussing over on the channel. We will revise these price targets at the end of the video. In terms of the higher time frames, not too much to update. We have, with this most recent pump on the weekly time frame, been rejected from the short-term moving average. On the EMA ribbons, we're still looking at this range SFP pattern. We had a range low swing failure pattern. Failed move equals a fast move in the opposite direction. We broke above these range highs. Failed move equals a fast move in the opposite direction. We're still looking to get continuation to the price targets we talked about in the video, but as we also said, you know, we've been bouncing for the past 4 days or so. This bounce literally only took 4 days to take your stochastic RSI from 6 to almost 100. The short-term moving average, since we've started to break down, looks like it's heading down pretty quickly, and in the next 1 to 2 days, I do believe we're going to have a bearish cross on the stochastic. The MFI almost came up to overbought territory up at 68, and it is heading down strongly. Both of these oscillators have lots of room to move to the downside, and also the squeeze momentum indicator looks like it's moving into neutral and about to reset momentum. Higher time frames, as we have been breaking down for the past month or so, since the 23rd of January. So coming up for 2 months now, you can see, you know, this brutal meltdown, which has allowed us to break down, you know, 41% as of the time of recording, but we did break down almost 53%. This was only a move from 100 down to around about 53, so we've got, you know, potentially another 50-60% move to come to the downside before we can expect another bounce. MFI though is still sitting at 70, indicative that liquidity conditions are super overextended. Not much buying volume is coming into this market, but a lot of money needs to flow out of this market before we can expect another bounce. The squeeze momentum indicator still in light green after this most recent bounce for the past 2 weeks or so, not breaking into bearish territory, indicative that all of these oscillators have so much room to move to the downside on the weekly, on the daily, whatever time frame you're looking at. There's a lot of room to go to the downside. Of course, higher time frames, like we've been saying, nothing's changed. You've got your range lows flipped as resistance, We're still moving down from these patterns, and our Elliott wave theory, we've still got this beautiful, since we topped out, this is a WXY double free structure. We had our first ABC zigzag into an INI free ABC zigzag into another typical ABC zigzag. So from wave X, wave C, you've got your wave A, wave B, and we're still coming down, expecting wave C to take us into new bear market lows underneath 1.5 cent. GalaGames against Bitcoin. While GalaGames has been moving up a little bit in the past few days, Bitcoin has been rocketing. leaving a lot of these altcoins in the dust. Since our last video, we told you that GalaGames was going to drop about 51% against Bitcoin. We've started to move down about 20%, a pretty big move. Still got about another 40% to go to the downside against its Bitcoin pair, in my opinion. So really, you can see Gala has been bleeding out against Bitcoin. And, you know, the trend is your friend on this one. It looks like we've got more room to move to the downside. So all in all, this is why I've got my eyes on this 618 Fibonacci here at 3.4 cent, basically. If we do start losing this level, you are going to start cascading. You can say, hey, we've got support at a 786 Fibonacci, but if we lose that, we're going to start coming down to this Bart pattern, fulfilling this Bart pattern, breaking down into new lows and heading down to my personal Fibonacci target down at the 1.618 Fibonacci. This is also a psychological level, 1 cent, ladies and gentlemen. We talked about this in the last video. This is still about another 71.5% drop from where we are at this moment in time. Now, one slight spin on things you can talk about is, hey, this could potentially look like a bullish pennant that we have broken to the upside of. And you can say something like, hey, you know, drawing from our swing low up to our swing high, if we hold this 618 Fibonacci, this might be a picture perfect breakout of this bullish pennant. I personally don't think this is how things are going to go. However, when I do my analysis on this channel, I do always try to provide a objective analysis. So, you know, looking at this, if we do get a breakout, you know, 14, potentially 15 cent could be on the table. Do I think this is going to happen? Absolutely not. Look at the liquidity conditions. These are not indicative that they can support a further rally to the upside. I don't think it would be plausible to say, hey, we can rally 3x when weekly oscillators like the MFI are looking at liquidity around about 71. That would be saying, hey, there's not enough momentum to support much more volume coming into this market. So just wanted to point this out. So really, all this boils down to whether you're a bull or whether you're a bear. Keep your eyes on the 618 Fibonacci. If we do backtest it and start skyrocketing, so be it. If you're bullish, you can look at that price target I just mentioned. But like I said, bullish or bearish, we can all agree that this 618 Fibonacci at 3.4 cent is the decisive factor. If you backtest it, start moving up, so be it. There are higher price targets that we did talk about. I'd personally prefer to look at something like a 2 extension up at 12 cent. I don't think it's going to happen. We'll talk about it if it does happen, but for now, keep your eyes on the 618. 3.4 cent. If we lose it, which is my prediction, I think we're going to come all the way down to 1 cent very, very soon. But for today, my friends, that's all I've got. If you do enjoy my content, as always, let me know down below by leaving a like and a comment. Share the videos with your friends. If you do want to further support the channel, you can click on the join button and become a member. But 3 ways of helping the channel: liking and commenting the videos. It really does help with the YouTube algorithm. If you want more of my content, feel free to follow me over on Twitter at 618_cowboy. But I'm going to leave it here for today. It's been your boy Cowboy Trades, my friends. I am out. Peace.